Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. The US added 8.18 lakh fewer jobs than reported earlier. This was a big BLS job number revision that was released yesterday evening. Moreover, even the Fed minutes was released yesterday. Now, going into the Jackson Hole summit, now perhaps participants will keep these in mind while listening to Mr. Powell's speech. Dollar continued to trade slightly weaker as euro and sterling made further headway. Good morning, JK. Now, a question for you that arises in my mind. Can we say that the US economy did decently well despite fewer jobs? Can that be an interpretation of the job number revision?
Good morning, Swaraj. Yeah, I think number revision in the payrolls was definitely high, and that was perhaps a surprise to many. But uh, you know, uh, my take is that there can be some technical factors because there was categorization of immigrants earlier, which was changed subsequently. So the job numbers uh, can be again revised later. It is also said that there will be a final revision in February. So it cannot be 100% relied upon. I know the final revision can be even worse, but that is something that we should not ignore. Now, we also know that unemployment rate has already gone up to 4.3%, and that is not changing. And because unemployment rate is a result of more of people, higher number of people seeking jobs than companies shedding jobs. And in fact, whatever it is, even if you say that the economy was, or the employment sector of the economy was not as strong as it was earlier thought to be, even then, no big impact has been seen on the consumption as wages remain high. And we know that it was a solid economic growth so far in the US economy, and even the uh, lowest forecast for economic growth, or the GDP, is at above 1%. It's much higher than if you look at Eurozone or even the UK economy. So it is downward revision, but not things don't look dire as it for the headlines suggest. But yes, another thing is the market might have already been discounting these numbers. So that's why post the numbers we have not seen much bigger movement in the currencies particularly. Yes, the other event yesterday was the FOMC minutes, which turned out to be more dovish than expected. In fact, the vast majority of the members agreed that if data continue to come in as expected, it would likely be appropriate to ease policy at the next meeting. It's a clear indication in September we will have a rate cut. Majority also remarked that risks to employment goal had increased, and many noted that the risks to inflation goal had decreased. Inflation goal and the employment had decreased. Some participants also noted that risk of further gradual easing in labor market conditions could transition to a more serious deterioration. So overall, you get a picture of dovishness. September rate cut given, and then of course going forward, how many rate cuts will be on the offing will depend on what Powell says. Of course, how Powell interprets these data in the coming Jackson Hole meeting or Jackson Hole summit speech tomorrow by Powell. That's what the market would be looking forward to. So the market actually has been on a holding pattern ahead of that, and also we'll have some more indication on the market of jobs when the weekly unemployment claims are once again declared for the last week. So definitely more and more focus on unemployment numbers going forward. But yes, I think the revision has done some impact on the perception of US economy's strength. The effect of the above two events were felt definitely in the bond market. 2-year yields plunged to 3.89 from a high of 4.01 and tends to 3.76 from 3.83%. Although the market's expectation of September rate cut still stays at 0.25%, but 80% probability of 1% cut this year. Stock markets have remained unperturbed by the payroll revision growth from lower, but they have taken heart from the increased chances of rate cut in September, as indicated in the minutes, and all three indices have turned positive. It was a dollar's move that was significant as it moved below January's low of 101.29, and the euro moved, euro and GBP, in fact, both of them made one-year highs. Yen also testing around 145 levels. Yuan remains strong. So this overall dollar weakness that has been continued in yesterday's session, but then as we head into the Jackson Hole summit, I think market is looking to consolidate and await further clues on the economy and the monetary policy. So that's why we are not seeing much move in the currencies or in the gold so far. Yeah, but come to a different world of USD INR. USD INR strongly bounced from the 83.75 levels, which we have been indicating, and that was hit on Tuesday, and yesterday it was back into the almost the weakest levels at 83.93, fully retracing all of its gains of the last week. Now, if you look at overall perspective of the last month, dollar index fell by 3%. EM Asia has risen by 2.35%. Latin American currency index rose by 1.7%. Rupee lost 3.2% against euro, 2% against GBP, 3.4% against Japanese, and 1.6% against the Chinese yuan. It's a gross underperformance by the rupee, which is very starkly observed. And against the dollar, it remains static almost, with barring a temporary rise based on some flows. And to think of it, the weakness also emerged because central bank keeps buying at the lower levels, as we reported on day before yesterday also. So that's the scenario for rupee. Possibly the central bank has two agendas here. One is to rebuild their reserves, as they have sold a huge amount in the forwards in the month of June, up to 15 billion. The second point is in their own monthly report, they have indicated RER at 7% overvaluation, perhaps keeping the dollar rupee steady and allowing, even as other currencies are rising, would allow this overvaluation to adjust by itself. So this is how I can see it. But yes, it stands out. Rupee stands out as a gross underperformer in this month. Let's see how it behaves if dollar index keeps going down further after this week's events. Thank you.
Thank you, JK. And just to quickly summarize the BLS revision, despite the headlines making all the claims, one thing to note is that there may be technical factors that might be affecting the revision. Maybe even the change in criteria of how an immigrant is defined and all of that. So basically, that technical factors also affect the revision, and moreover, there may be a final revision in February. But one thing to note is something which JK mentioned, that despite the weaker employment sector, no major consumption impact was seen during the revision period. So despite it being a negative number, things don't look dire as the headlines suggest. The FOMC minutes was, of course, more dovish than expected. Majority of the members were in favor of a rate cut. And of course, markets would be looking forward to Mr. Powell's upcoming Jackson Hole summit speech, which is tomorrow. And after the FOMC minutes and the BLS revision, yields cooled off. Dollar index moved below its January lows, euro and pound at one-year highs against the US dollar, a continuation of the trend we have been observing in the past few days. While dollar rupee trades in its own universe, strongly bouncing from 83.75 levels. Despite strength in Asian and EM currencies, rupee remains weaker, not just against the US dollar, but also against other currencies like euro and GBP. When we talk about rate cuts, soft landing, recession, it is very important. These are important events that are up ahead. So do tune in for a webinar that our own JK has been moderating today between 5 to 6 p.m. That it will be a very, very interesting session. So if you have not registered, please do register. And of course, the event starts at 5 p.m. today. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.